Hey everybody, hope you're doing well. Hope you had a great week of trading. Today we're going to cover the QQQs for the week of April 12th, 2021. Essentially, this is just the NASDAQ-100 or high-tech stocks. We do this on a weekly basis, so if you like this content, please like or subscribe. Everything that we cover here is coming from Prep to Grow's big data and AI solution called Grow. This is the data that comes out of it. This is our opinion and our recommendations. So as always, use caution when taking opinions and recommendations. So let's just jump into it. What's the net? So last week predicted it was a bull. Right now, it's prior to market close, so it's about a 3% gain for this week. Great week. All you call traders out there and option or stock traders, hopefully you had a good week at this. Next week, we're expecting a small bull for a couple of reasons. Mostly momentum. Stocks at our all-time high. There's a lot of momentum going into 2022 and 23. Even people talking about GP being exceptionally up for the year. So a lot of positive signals. A couple things to be very cautious of. When we look at this is FANG Plus stock growth is currently outpacing company growth. So the thing that Prep to Grow likes to look at is our predicted company growth less than or greater than the current stock price? If it is, there's great opportunity to get some great gains. If stock price is higher than company growth by a significant margin, then you're looking at a potential pullback. So right now, FANG pluses are a tad higher than we would want it to be. We're going to start to introduce something called the stock to growth ratio. We're going to talk about it today a little bit, but we're going to start to incorporate that within our videos so you have a better sense of what we mean around it. Instead of talking about, we'll give you an actual ratio so you can look at it and understand it and see if it's something worthwhile putting into. It's a very big indicator and correlation for us when we make our recommendations, as we primarily look at that. Other things to be cautious of: technical resistance barriers, 52-week high, 20-day moving averages, so on and so forth. Qs are high. High-tech stocks are at all-time highs, right? So be cautious of that. It's down a little bit today, a tenth of percentage points, so not a lot, but people are getting, maybe it's a little too high. The next thing to worry about is a potential for a bubble. This is where we're starting to introduce the stock to growth ratio. So as a market as a whole, stocks have gotten way out of hand. A lot of people are starting to talk about this. Stocks are high, looking at 1999.com bubble levels, that kind of stuff, which is pretty true. Levels are very high. Stock prices compared to company growth is very high. There's a lot of momentum waiting for this to catch up, so a lot of positivity in the market. I would say the exception is with tech stocks, or Q specifically. If we look at FANGs plus non-FANGs, they're right where they should be, right? So certainly there's other sectors that are overvalued, and you should be cautious of those. On the tech side, which is normally the one that is the high flying, it's actually pretty close to where it absolutely needs to be. So let's talk about that a little bit. Stock growth for the year. So what we do here is we always compare against January 1st, 2020 to current date. It's hard to do it at the beginning of this year or 12-month rolling, just because of what happened mid last year. So it's hard to figure out a baseline because of that. So we're looking at the next baseline, which was really January 1st, before everything kind of fell apart mid-year. So if we look at that as the baseline, it's 55% stock growth since then. Growth level for company growth, it's at 46%. So it's pretty close, right? It's about 9% away. From that perspective, as we look at stock to growth rate, it's a 0.9. We have other factors that go into that, so it's not just 46, or 55 divided by 46 or what have you. There's other factors, so it's actually, when we look at growth versus stock, or stock versus company growth, it's 0.9, which is great, which is where you want to be as a whole. And what's really driving that is the non-FANGs. The non-FANGs are just crushing it. They're growing very well, and people typically look at FANGs. FANGs are real high, but it's the non-FANGs that are really crushing the growth for the high-tech market right now. Analysts' expectations, they've increased a little bit at 1%. They're pretty low in terms of their expectations for earnings per share. Why? Who knows? I mean, it's an analyst. If we look at quarterly earnings last week, Paycheck, we projected that they were going to have a rough quarter and have a rough quarterly announcement. They were about a third to half of where they were 3 years ago due to competitive pressures. And they missed a bunch of critical metrics, and their stock went down 8%, I believe, post announcement. So, with an alignment where we were projecting it was going to be in terms of a pullback. So hopefully, put option players played into that. Next week, it's going to be super boring. No announcements whatsoever. So don't try to track or play any earnings next week. There just aren't any. The week after that, April 19th, there's a bunch. There's 10 that are projected to have their earnings. Again, these companies sometimes change their earning announcements at the last date. So if it does that, we'll just carry it forward. But this is as of today in terms of what their announcements are looking like. Companies like Netflix, Intel, Lam, Xilinx, and Intuitive Surgical, the major ones, about 7.1% of the total Qs are announcing next week. So cumulative, if they do good, it'll be good. If it's a mix, then it could be a little bit of a pullback depending on which ones miss. But let's jump into ones that are coming up on the 19th. We won't go into too much depth just because it's 2 weeks away. But we'll jump into the ones that are announcing the 19th. So let's jump over to the Grow application and look at the pricing and the dates. So we're here in the Grow application. If you haven't seen this before, this is Prep to Grow's big data AI platform where we do all of our screening, our stock recommendations, and soon to have portfolio analysis and management. If you are in here and you want to see what Qs are announcing in the next 3 weeks, all you got to do is just go down to ETF, select your favorite ETF, show next earnings within the next 3 weeks, hit apply, and you'll see all the ones that come up. Gilead, Intuitive Surgical, AMD is coming up in a couple weeks. So you'll be able to see all of them and start to get ahead of it. Prep to Grow does not play earnings. You can, and we hope you have make a ton of money off of earnings. Earnings are so volatile and so incredibly hard to predict that we don't play it. A simple word can really crash the stock price after earnings. We've done it with Facebook. They crushed their earnings. Somebody said something weird in the meeting about Russians, and it crashed their stock, right? So you just got to use a ton of caution when getting into and playing volatility for earnings. It's highly risky, highly speculative. We don't do it. We don't suggest you do it. But if you do it, we hope you're incredibly successful at it. So these are the ones announcing. We're going to look at one on the mover side. So for those that are day traders, if you go to movers, this is where you kind of figure out what your day looks like. So who's moving pre-market, volume to open ratio, open interest ratio, and who's doing different things with that. The one we're going to talk about is actually one that's announcing in 3 weeks. So Amgen at the expiration of July 16th, 2021. Let's take a look at it. There's been a ton of unusual option activity with this one in particular. We're okay with predicting Amgen. We're at 82 success rate. Not enough for us to really make a play off of it. But for momentum-wise, there's a lot of momentum with this thing. So an unusual option activity. So today is at 1.54. Yesterday it was like 3.5 in terms of the ratio. So for those that don't track that or do the kind of day trading things, anything greater than 1 means there's a lot of unusual option activity out of it. So to have 2 days in a row of it, that's a pretty big deal. Again, this is Amgen put. They're announcing April 28th. We're projecting them to go down just a hair. Not enough for us to get into it and take any really meaningful profit off of it. So these guys must be looking at a big pullback, whoever's doing this. Again, July 16, 2021, Amgen put at a strike price of $250, and it's an expensive one at $1,200 per option contract. So, but wanted to raise this up as one that's out there for 3 weeks with a ton of unusual option activity. But let's jump into the ones that are announced on the 19th. We're going to cover 4 of them. Intel, Intuitive Surgical, Netflix, and Xilinx. We'll get into more details next week with them and go a little more analysis. Right now, we'll just do a cursory level. Intel, we're projecting the stock price is going to go down. A lot of technical resistance. It's at a high price. This is for today. $54 200 days ago, and it's steadily gone up. Now, Intel fits the model of high company growth rate to low stock price over the period of time. So they do fit the model of where we want to invest into this. The challenge is the history is poor historically. So what we see this going forward, Intel is looking good, right? Going into earnings, definitely going to see a pullback. They haven't had a good couple quarters. They don't have a lot of historical to drive revenues and growth for this current quarter. They're doing a lot of big moves to push it, their growth rates going into next quarter after that. And so from that perspective, we'd look at them as a potential buy. But right now, they're not going to have a great quarter. At least that's what our data is showing us growth-wise. If we look at Intuitive Surgical, these guys look great. 2 weeks from now, going to crush it. We think all-time high growth rate. Their stock price is less than their company growth rate, so that's a great thing. That's what we look at to invest in. You're going to announce on April 20th. We're expecting about a 5% gain. They look good. They make up 0.7% of the Q holdings. So they're a decent chunk. Intuitive Surgical looks great. Netflix, we projected them last year to not have a great quarter, and they had a good quarter. So, prep to grow is not perfect by any stretch of the means. Our algorithms pick up signals, and the signals miss this one. We don't have a great track record with them. They're at 75%. We do see them pulling back. We have not seen a lot of growth with them. Their stock is greater than their growth rates. But it's all about subscriptions and where they're spending money and beefing that up. So a lot of marketing and sales, what we see in terms of that growth is high. But we still see that they're going to pull back this quarter. Take it with a grain of salt. We're not great at projecting these guys, 75%. Pretty accurate with stocks generally, 80% or more. This one falls out of that, so take this with a grain of salt. But we're looking right now, they're going to pull back, and the growth rate that we're seeing tends to support that. Xilinx, love Xilinx. Great company. Their growth rate is higher than their stock price, so they fit our sweet spot for disclosures. Prep to Grow owns stock in them. We will definitely sell before the earnings of April 20th. They're a hair share away from what our targeted price exit is, but they look good. Xilinx, again, good company, announcing our April 20th. We're expecting they're going to go up about 4%, so not a huge gain here. Again, they're pulling back a little bit today. But again, Prep to Grow doesn't recommend playing earnings. Highly risky, highly volatile. But 2 out of 4 are going to do good. Intel, Netflix may struggle. But let's look at price predictions and bear versus bull for the next 2 weeks. Look at the screen. What we're seeing here is this is really the market analyst ratings. So their forecasted revenue EPS. We see that they're suppressed. We see that FANGs are pretty overheated right now. They have a higher stock price to growth rate, so that's not a good thing. But we do see that the non-FANGs just crushing it. They have a lower stock price to growth rate, so if you start to look at the non-FANGs, the non-Amazons, like the Xilinx, the Intuitive Surgical, the ones we just talked about, they're crushing it. They make up a substantially lower percentage of the FANG holdings. So if you're going to get into it, get it as an individual stock. They're not going to influence the Qs as much. But with the FANG Pluses being 65% of the total QQQ holdings and them being overheated, that raises some pauses for us, certainly in our future investments within the QQQ. So just be aware, FANG Pluses are overheated. Now, if we go into the next screen, which is 30-day predicted stock price, pull back a little bit for next week on the bulls. The bears are really kind of pushing that down a bit. But still, if we average it out, it's about where it should be. That's why we have a cautious small bull. Momentum really driving that up. FANG's a little bit overheated. So it's really next week, I think the momentum carries on for the general stock market and continues to push it up. That's supported by our predictive bear versus bull. We see that there's more flatness in the recommendations next week with the FANG pluses maybe pulling back a little bit. Again, they're overheated. Growth does not exceed stock price, and that's always bad. Direct correlation between the two that we've seen within our algorithms and our testing. So just be aware, FANG's overheated. Be cautious. That's the Qs in the NASDAQ-100 for the week of April 5th, 12th. So hope you have a great week. Good luck in your trading. And as always, happy trading. Take care.